Okay, hello and good morning, everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the last trading day for this week and the last trading day for this month as well. So, welcome to the May's 31st trading session, morning trading session, where we're going to have a look at the markets, a few of the charts. The usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest, and we can continue. Okay, so now then, let's quickly jump into the charts. Now the first one I want to touch on here very quickly, just to give you a quick update on Nikkei 225, so the Japanese index. So a while ago, I talked about this little range that the index was kind of trading in, but to be honest, I mean, this already kind of, we can ignore that. What we could focus here on is, of course, the fact that it broke below its key support zone, a few of the key support zones. So, and also is trading below this little tentative downside resistance line. So in a way, for us now, of course, all this negativity surrounding this could in a way continue. The index managed to close this month already, because the Japanese index just closed right now, so it managed to close the day and the week and the month lower here, and of course there was the big speculation, will it actually close below this little low that we saw here back around mid-May, but as you can see, it comfortably went down, comfortably traveled further below this area here, below this excuse me, 20,765 zone, and now ended the week below the 20,595 level. So basically, this of course creates this little bearish atmosphere here. We may see this one traveling lower next week as well. The next potential target for us is around here, around the 20,345 zone, which previously acted as a good area of support here back around the 17th of January and also around the 8th of February. Now, of course, further declines are possible as well, but we'll keep it short and simple for now. This is what we're going to be targeting, this level right here near the 20,345. Of course, do not exclude the possibility of seeing a small correction back to the upside. And let me just clean up this chart a little bit, guys, because I have too many lines here. So that's why we may see this one traveling a little bit higher, maybe even pushing back above this 20,765 level. Now, if the only thing is that here is that still this downside resistance line could come into play, even if we see a push back above this 20,765 level. In order to consider higher levels, well, to be honest, we will take a very cautious approach here and a very probably more conservative approach, and wait until we see a good clean move above these little highs here near the 21,400 zone. This way, the index would also be placed back above its 200 EMA, and then yep, we could see this one traveling higher. But for now guys, like I said, the main scenario is more to the downside. Let's see if it actually manages to reach this 20,345 level, and to be honest, if it actually reaches this area and then continues to slide further down, well, I mean, we could end up hitting the psychological 20,000 level, and then of course it will be very interesting to see what it wants to do from there. But for now guys, let's go with small steps, and aim for the 20,345 level next week. Jumping into a few commodities now very quickly. Now gold, I talked about this one this week, and I was telling you guys to keep a close eye on this level right here, the 1289, because that's where we're going to be looking for in order to consider higher levels. As you can see, that yesterday we had a nice push higher here, very strong one. It kind of rebounded from the 1275 zone approximately there, and pushed higher and managed to break above the 1289 zone. So basically this of course creates this nice positive atmosphere here for gold. In a way, what could happen here is, first, we may see a small retracement back down. We may test this 1289 zone, or even actually going even a little bit lower here, testing this 1287 approximately there. But basically, in other words, this little territory here could play out as a nice area of support if the commodity decides to retrace a little bit lower here. And if it holds, if this support area holds, then we may see another leg of buying here, and this is where we will aim for the psychological 1300 level, 1301 approximately there, and we'll take it from there, see what it wants to do. If it wants to break it, that's wonderful for the bulls. We could see this one traveling higher, but if it holds, we may see this one kind of balancing around here a little bit, maybe slightly below the 1300 level, before it believes before it thinks that it's okay to break it again. So for now, yes, we did have a nice push higher here, but there is a chance for a small correction before another leg of buying. In terms of the downside here, well, we will now, again, this is the line that I've mentioned in one of my previous videos as well, this upside support line taken from the low of August last year. But to be honest, as you can see, it got violated a few times here. So in a way, we can actually get rid of this one right now and just observe some of these key important support support and resistance levels. So if we see a drop below the 1287 zone here, then, well, this could increase the chances for the slide lower. The only thing is that now for us to be able to target slightly lower areas, well, ideally, to be honest, we would like to see another drop here below the 1275 zone. This way, this would confirm, well, it wouldn't confirm actually lower low, but it could open the path towards this key important support zone that I keep talking about all the time, and that's this 1266 area. Now, for now, and I do understand that this is quite a big of a territory here, but this is where, to be honest, it could travel lower a little bit, but then maybe even it will fail to travel all the way here towards the 1275 and then reverse and push higher again. So that's why this little territory for us is going to be somewhat of a neutral one. In order, like I said, in order for us to consider at least slightly lower levels, we would like to see a drop below the 1275 zone. But in order to consider, let's say, aim for lower areas in more of a near term, well, the break of the 1266 level, that's what we're going to be waiting for. For now, this is looking more bullish than bearish, but do not exclude a possibility for a small correction before another leg of buying. Very quickly on WTI oil. Now, I've talked about this one a while ago, and as you can see by the arrows, we've kind of shifted a little bit. So in a way, it did travel higher, but never kind of reached this 60.35 level that I talked about previously. But that said, I mean, that's a good sign for the bears, because it was a good sign for the bears because it was struggling to push towards it, and you can see that the sharp sell-off that we had yesterday, which led to a break of this key important support zone near the 57.30. Now, that said, of course, I mean, this is not really kind of painting that positive picture here. For now, we may see something like this. We could see a bit of a correction back to the upside here, maybe even actually a test of this 57.30 zone, or even actually would do maybe the similar thing here as it did here this week, where it didn't kind of reach this important resistance zone which previously acted as support. It kind of travel a little bit somewhere here, it traveled a little bit higher, but kind of failed to reach it and then sold off again. So we could see something like this happening here as well. So of course we will keep a close eye on this 57.30, but if it, let's say, struggles to even get there, this could be a bad sign, again a bad sign for WTI, and we could see another leg of selling. The area that we're going to be targeting will be around the 55 zone here, 55 area, which previously acted as a very good area of support back here on the 25th of February and also around the 8th of March. So keep your eyes on this one. Also, such a move could, if we get this move higher here, we could also maybe test this little downside resistance line, a bit of a tentative one, I do understand that, but we may see maybe that one getting tested. This is in a way like the last resort for the bears to step in here, somewhere around here, just in case, let's say, we get a break above the 57.30. So this could be that, like I said, last resort for the bears to step in. But again, in order, let's say, for us to shift our views more to the upside, at least in the near term, ideally we would like to see this one traveling back above the 60.35 level, and then we will aim for higher levels. I mean, looking at this 4-hour chart, we could also see, if we see this move here higher, probably by the time it would move here, we would have the 200 EMA approaching this area around the 60.35, and then if we do see a push above this, this would also place not only, of course, breaks this key important resistance zone, but also could place the price above this 200 EMA, which could be seen as a positive sign. So for now, of course, the upside is slightly off the table, unless it's a small correction here to the upside. We will keep an eye on this potential move here. Like I said, we could see, let's say, this one traveling higher, maybe testing the 57.30, and if it struggles to push higher, or at least above this downside resistance line, then, well, I mean, we could see another leg of selling here, potentially towards the 55 zone. Very quickly on Ripple, just a quick update here. Yesterday I talked about this one, and I was telling you guys to keep a close eye on this level right here near the 0.4790. It failed to drive towards it, and as you can see, it sold off, and actually tested this tentative upside support line that I talked about as well. So in a way, it did get a nice rebound from it. We could see this one maybe correcting a little bit higher. The only problem here is, of course, now the big question here is, and it's going to be very interesting to see how it's going to play out today and, of course, over the weekend. If this upside support line holds, that's good news for the bulls. We could see this one traveling higher again. The only thing is, now what we're going to do here is we're going to wait for a clear break above this 0.4790 level first. We'll before kind of examining the upside. Now, another thing that you should probably kind of keep an eye here is from the kind of this technical little picture, this technical little pattern, and that's the ascending triangle formation. So let me just put this upper side here, just highlight it like this. And this is what you could keep an eye on. So in a way, we could see Ripple kind of moving sideways here a little bit inside this formation, and then we'll wait until it kind of gives us a nice clear break through either of the sides. So for now, of course, be very careful. If, let's say, this decides not to move inside this triangle formation, then keep your eyes, of course, on this upside support line, a break below it, and a price drop below this 0.3960 level, somewhere around there, approximately here. Then, well, it could trigger another round of selling here, and more sellers could start coming in and potentially driving this one lower. So that's why this spot here is a very tricky one. Now, again, as long as it remains intact, yes, we will continue targeting higher levels, but if it starts breaking, then yep, we could see further slide lower. Now, very quickly on AUDUSD, this, I'm not going to spend too much time on it. I've talked about this one yesterday, and basically we're still stuck here in this little range. We're long story short, we're waiting for this one to get out of it, either through the upper side here or through the lower side, but even then we're not going to go like crazy on it. If we see a push above this, above the upper side of it, of this little range, then yep, we will target this 200 EMA here, which could probably already by that time coincide with the 0.6970 level. In terms of the downside, a drop below the this is the lower side of this range at 0.6905 could lead the pair towards the lows of last week near the 0.6862 zone. So keep your eyes on that one as well. USDJPY. Now this one is getting hit today, and it continues to travel lower. It broke some of its key support zones, so the first one being this one here, the 109.20, then it broke the 109.10, and the last resort kind of was the 109 zone. This is what I talked about during this week when I was covering USDJPY. So if we see a break, especially if we see a close of the 4-hour candle below the 109 zone, now this is not looking good for USDJPY. We may see this one sliding a little bit lower, and the next target for us is around the 108.70. This is where we're going to keep an eye on. That level played its role back here. It marked the intraday swing high of January 30. Yes, January 31st. It was the intraday swing low. Do apologize. Yep, the intraday swing low. And the last kind of point here, which could be a very good potential support zone, could be seen around the 108.50. As you can see, that was the low here of the 31st of January. So for now, keep your eyes on this one. Of course, this could slide lower, but if we do see a continuation here to the towards the 108.70, we may see the rate stalling around here somewhere and then rebounding. And if it struggles, let's say, to push back above the 109.20 zone, now this is where it could become again ugly for the pair, and we could see another round of selling, which could potentially lead towards that level, the 108.50 that I talked about earlier. So for now, guys, keep your eyes on this 108.70. Slightly below there, slightly above that, sorry, we do have the S3, today's S3, which is around the 76 zone approximately there. So keep your eyes on that one as well. We may see, like I said, a small rebound from it, and if it struggles to get back above the 109.20, then yep, we will examine the downside again, another potential leg of selling. And the last pair I wanted to quickly touch on here is that USD-CAD. Now this is even though the USD-JPY is selling off, USD-CAD is pushing higher. So basically that's the weakness of the Canadian dollar here playing out. So as you can see, this tentative upside support line that I talked about this week played out nicely. It provided some good support, and the pair managed to push not only back above its 1.35 level, but also above this 1.3522 zone that I talked about as well. So this and this is what I was saying, that we need to see a clear break above this before examining a potential move towards the 1.3565 level, because that's going to be our target for today. Let's see if it actually manages to reach that. If we do see a push there, that's great. And we may see the rate stalling around here, or maybe just slightly above that near the R3, which is around the 35.72 zone. And then we may see a small correction maybe to the downside, and then we'll take it from there, see how it's going to perform. In order for us now to, let's say, shift our views more to the downside, ideally a drop below the 1.35 level now would be required before examining lower areas. For now, that's the game plan. Of course, we are more positive than negative on this one, but and it's not far from its 1.3565 level, which could get tested. So okay, guys, I hope you found it useful. Thank you very much for watching and listening. And if you want to join me later on at my Trader's Tea Time, and that's as always 13:15 GMT time, where we're going to have a look at some of these instruments just to see how they performed, and maybe some not maybe, but some new ones as well. So thank you very much for sticking around, and have a wonderful day, guys. Thank you very much. Bye bye.